Welcome to the Quantum Chain Podcast Deep Dive.
Hello.
Today, we're digging into a whole bunch of source material. You send us articles, notes, research, all centered on one specific digital currency, Litecoin, or LTC.
That's right, Litecoin. It's a cryptocurrency that, branched off from Bitcoin's blockchain. The aim was always this peer-to-peer electronic cash system, decentralized.
And it's got that famous description, doesn't it?
Yeah.
Often called the silver to Bitcoin's gold.
Yeah, that one stuck.
So our job today, based purely on these sources, is to unpack the really key takeaways about Litecoin. We're talking its history, how it actually functions differently from Bitcoin, and what these sources are saying about its future, its place in the whole crypto scene.
Sounds good. It's definitely got its own story and some interesting technical choices. Let's see what the sources tell us.
Okay, so starting right at the beginning. According to these sources, what is Litecoin fundamentally and how did it, come into being?
Well, the sources describe it pretty clearly. It's an open-source global payment network. Decentralized, of course. It was started back in 2011 by Charlie Lee, who used to be an engineer at Google.
2011. So pretty early on in the crypto game, just a couple of years after Bitcoin itself.
Exactly. One of the veterans, really.
And its creation wasn't just out of the blue, was it? The sources suggest it was a reaction to Bitcoin.
Absolutely. The materials highlight that Lee and others were getting concerned about Bitcoin maybe becoming, too centralized, especially the mining aspect.
Right.
So the initial thought behind Litecoin was, let's make something where individuals have a better shot at mining, something less likely to be immediately dominated by big industrial-scale mining firms.
Has that initial focus sort of evolved over time? What's the goal now, according to these sources?
It seems like it, yeah. While decentralization is still core, the sources today really stress its role as a practical tool for, day-to-day transactions.
Like small payments.
Yeah, microtransactions, paying at a shop, that kind of thing. Anywhere that speed and, crucially, low cost are important.
That makes sense, given some of its design choices we'll get to. And of course, like Bitcoin, it's still used as an investment vehicle for speculation, too.
Oh, definitely. It trades on all the major exchanges.
Okay, let's rewind to 2011 then. Understanding that context seems pretty key to understanding why Litecoin was made the way it was.
It really is. The sources point out that back then, Bitcoin mining was shifting gears fast. People were moving from regular computers to powerful graphics cards, GPUs, and ASICs were just starting to emerge.
ASICs being those specialized mining chips.
Exactly. And that hardware race fueled those fears Charlie Lee had about individuals getting squeezed out, about centralization. He wanted an alternative path.
And that's where the silver to Bitcoin's gold idea came from.
Right. The sources explain it wasn't just a catchy phrase. It was about positioning. Litecoin wasn't meant to kill Bitcoin, but to complement it. It'd be used more often for smaller things, like how silver is used more broadly than gold.
Okay. And technically, how did they first try to achieve that accessibility, that difference?
The main initial lever was the mining algorithm. Instead of Bitcoin's SHA-256, Litecoin used Script.
Script, right.
The idea behind Script, as the sources explain, was that it needed a lot more computer memory, RAM, compared to SHA-256, which was mostly about raw processing power.
And the hope was that would make it harder for those early ASICs.
Precisely. Keep things more level for people mining with, say, GPUs for a bit longer, keep individuals in the game.
But the sources also say that didn't last forever.
No, it didn't. Technology marches on. By 2014 or so, script-specific ASICs were developed and became dominant anyway. So that initial attempt to resist specialized hardware, it worked for a while, but wasn't a permanent fix against market forces and tech development. An interesting lesson there.
Yeah, definitely. Looking at some other key moments mentioned in the sources, there was early growth, helped by exchanges like BTCE listing it.
Getting listed is always huge for a new coin.
A crazy price jump in late 2013, like 100% in 24 hours.
Volatility, classic crypto.
And then something quite unique starting in 2014, merge mining with Dogecoin.
Yes, that's a notable partnership. Still ongoing. We can touch on that more.
And more recently, the sources bring up a few things.
Right. PayPal getting involved is significant. First, letting people buy a sort of derivative in 2020, and then importantly, allowing actual Litecoin transfers in 2022. That boosts accessibility.
Then there was that weird Walmart story in 2021.
Oh, that hoax. Yeah, the sources confirm it was totally fake, a bogus press release claiming a partnership. but the price went nuts for a bit. Just shows how sensitive these markets can be to news, even fake news.
Definitely a cautionary tale. And a more concrete development recently flagged in the sources was the MWB activation in 2022.
Yes, Mimblewimble extension blocks, a major upgrade.
Okay, so building on that history and its aims, let's really get into the nuts and bolts. How is Litecoin technically different from Bitcoin? This is where it gets quite interesting, isn't it?
Absolutely. Yeah, it's a fork, but it's definitely not just a copy-paste. The sources highlight some key protocol-level differences.
First up, that hashing algorithm we mentioned, Script, versus SHA-256.
Right. Bitcoin uses SHA-256, Litecoin uses Script. We talked about the initial ASIC resistance goal with Script, making it more memory hard. But the takeaway now is that while it created a different kind of mining environment initially, it didn't ultimately prevent the rise of specialized Script ASICs and the centralization that comes with them.
Okay, then there's the block time. This feels like a really core part of Litecoin's identity.
It is. This is a major differentiator, according to the sources. Litecoin aims for a new block every 2.5 minutes.
Compared to Bitcoin's 10 minutes.
Exactly. So the practical outcome is much faster transaction confirmation, roughly 4 times faster, the sources state. This directly supports that goal of being better for quick, everyday payments.
And it also has a larger potential supply of coins, right?
Yes, the total coin cap is 84 million LTC. That's exactly 4 times Bitcoin's 21 million cap.
4 times faster blocks, 4 times the coins. Seeing a theme here.
Seems intentional, yeah.
Now, both have halvings where the mining reward gets cut. How do those compare?
They both use halvings to control inflation, slow down the creation of new coins over time. But the schedule is different because the block times are different. Litecoin's halving happens every 840,000 blocks.
Which, because blocks are faster, happens roughly every 4 years, similar to Bitcoin's cycle.
Roughly, yes. Bitcoin's is every 210,000 blocks. The sources give the dates for Litecoin's past halvings: August 2015, August 2019, and most recently, August 2023. The next one should be around mid-2027.
Got it. And what about transaction speed and capacity? One source seemed to put numbers on it.
Yeah, one source specifically mentioned Litecoin potentially handling up to 50 transactions per second, whereas Bitcoin's more like maybe up to 7. That capacity difference is significant.
And that pairs with another key point.
The transaction fees. This comes up repeatedly in the sources. Litecoin's fees are consistently highlighted as being much, much lower than Bitcoin's. Often less than 2 cents per transaction, according to one source. That's a huge deal if you're thinking about using it for, buying a coffee or small online purchases. Makes those microtransactions feasible.
Definitely. Now, what about that MWE thing, the optional privacy feature that caused a stir?
Ah, yes. MWEB, Mimblewimble extension blocks. It was activated in May 2022 via a soft fork, so an upgrade that didn't split the network.
And the key word there is optional privacy.
Exactly. That's what's really interesting and what the sources emphasize. It's not like Monero, where privacy is default. With MWEB on Litecoin, you choose to use it for a transaction. If you do, the amount being sent is hidden from the public blockchain. Only the sender and a receiver know it.
Why add that?
The sources suggest it was to improve fungibility, making each coin interchangeable, like cash, and offer users a cash-like privacy option. But making it optional was likely a strategic choice, perhaps trying to balance privacy benefits with avoiding the intense regulatory scrutiny that full-on privacy coins often face.
Which we saw play out anyway, didn't we?
We did. More on that later.
And one last technical point you mentioned earlier, the merge mining with Dogecoin.
Right, so Litecoin and Dogecoin are merge mined. The sources explain this means miners can use their computing power to mine both Litecoin and Dogecoin simultaneously, using the same script algorithm without reducing their efficiency on Litecoin.
So they earn rewards from both chains.
Essentially, yes. It's described in some sources as a symbiotic relationship. Dogecoin gets to piggyback on Litecoin's much larger and more secure mining network, and Litecoin miners get extra income. It's quite a unique setup in the crypto space.
Okay, that covers the main technical differences. So for someone listening, how do they actually get involved? Let's talk mining, buying, selling, based on these sources.
Right. So mining Litecoin. Well, like Bitcoin, it's the process of computers solving those puzzles to add blocks, secure the network, and earn new coins. But the sources are pretty blunt. For an individual using, say, a home PC, it's generally not profitable anymore.
Because of the big players and specialized gear.
Exactly. The network is secured by large mining pools and those powerful script ASIC machines we talked about. If you do want to mine seriously today, the sources say the path is investing in script ASICs and joining a mining pool to share rewards. It's become quite a, well, corporatized setup, as one source puts it.
So for most people, buying and selling is the main way in. Exchanges.
Yeah, that's the standard route, yeah. The sources list several big U.S. exchanges where Litecoin is readily available. Coinbase, eToro, Kraken, Binance.us, even Robinhood and Gemini.
And these require ID checks.
Yes, the regulated ones operate under Know Your Customer, or KYC, rules. So you'll need to provide personal information to set up an account and trade. That's standard practice for platforms handling fiat currency.
And selling is just the reverse process on those same platforms.
Pretty much. You'd send your Litecoin from your personal wallet to the exchange's deposit address for your account, then sell it for dollars or another crypto. There are also decentralized exchanges, DXs, where KYC rules can differ, but they often have their own complexities.
And we shouldn't forget those other avenues mentioned, like PayPal letting users transfer actual LTC now, and payment processors like BitPay supporting it for merchants.
Right, those increase its utility beyond just trading on exchanges. Shows it is being used for payments to some extent.
Okay, so pulling this together from the sources, the history, the tech, how it's used, what are the main upsides and downsides they point out, the benefits and challenges?
On the plus side, the sources consistently mention the speed near instant transfers between wallets. Those really low transaction fees, often under 2 cents, are a huge selling point for actual use as payment.
Mobile access, too.
Yeah, easy mobile wallet compatibility. The option for enhanced privacy with MWB is seen as a benefit by some users, and it's generally easy to store on various hardware or software wallets.
But it's not all sunshine and rainbows. What are the challenges or potential disadvantages raised in the sources?
Well, there's an argument some skeptics make, noted in the sources, about a potential trade-off. By prioritizing speed with that faster block time, is there a theoretical reduction in security compared to Bitcoin's longer confirmation time? The idea being it might be theoretically cheaper for an attacker to try and disrupt the network.
Though the sources don't say this has actually happened.
No, there's no indication it's been successfully attacked in that way. It's more of a theoretical security model discussion.
And the speed advantage itself isn't unique anymore.
Right. While Litecoin is faster than Bitcoin, the crypto space hasn't stood still. Sources acknowledge that many newer cryptocurrencies now claim even faster speeds and higher throughput. So competition is fierce on that front.
And the biggest challenge seems to be that regulatory aspect around MWB.
That's definitely highlighted. That optional privacy feature, MWE, directly led to some major South Korean exchanges delisting Litecoin. Why? Because their local regulations demand monitoring transactions for things like money laundering, and MWB makes that harder. It's a perfect example shown in the sources of the tension between adding privacy features users might want and meeting global regulatory compliance.
A tricky balancing act.
Very. And just on a broader scale, if you compare Litecoin to Bitcoin, its market cap, its overall adoption level, network effect, it's just significantly smaller. Still big, but not in the same league.
Okay, so looking ahead, what do these sources suggest about Litecoin's future? Where might it be going?
Well, the sources show it's certainly not dead tech. There's an active development community maintaining it, putting out fixes, making improvements.
But adapting too.
Seems like it. For instance, the sources mention it activated runes in 2024. That's a protocol, similar to the one on Bitcoin, for creating fungible tokens on the Litecoin blockchain. Suggests they're trying to stay relevant, maybe tap into things like tokenization, NFTs, that kind of newer stuff.
And the market numbers still show activity.
Yeah, the May 2024 data cited in the source's market cap around $6 billion, daily trading volume like $310 million shows it's still a major player being actively traded. And that stat about processing 34 million transactions in the first part of 2024, that points to real-world usage happening.
But predicting the long-term future, say 5 years out, the sources seem hesitant.
Very much so. They're quite clear. Forecasting Litecoin's price or exact role down the line is really difficult. You've got factors like governments worldwide still figuring out crypto regulation. You've got tons of new coins launching constantly, and just the sheer volatility of the crypto market itself.
So its future depends on staying useful.
Basically, yeah. The sources say its future hinges on how users and investors continue to perceive it, whether it maintains its relevance for payments or finds other niches, and how it navigates that regulatory landscape.
And if someone's thinking about investing, what's the takeaway from the sources?
The message is pretty standard for crypto. Treat it as a high-risk, speculative investment due to that volatility. Whether it fits your portfolio depends entirely on your personal financial situation, your tolerance for risk, and your own research and outlook.
Consulting an advisor is recommended.
Highly recommended, yes. And the sources give that crucial reminder. Unlike money in a bank or some traditional investments, your crypto holdings usually aren't insured. If something goes wrong, you could lose it all.
Okay, so let's try to wrap this up. What does this deep dive into Litecoin based on all these sources really mean for you, the listener?
Well, we've traced its path, haven't we? From its start as a reaction to Bitcoin, aiming for something faster and cheaper.
Right. Unpack those key technical differences. Script, faster blocks, lower fees.
Looked at its more recent moves, like adding optional privacy with MWEBI, which brought both potential benefits and regulatory headaches.
And weighed the arguments about its security, its competition, and its uncertain future.
So understanding these specifics, pulled directly from the source material, should give you a much stronger basis for thinking about Litecoin, whether you see it as a potential payment tool, maybe a speculative bet, or just, another interesting piece of the whole cryptocurrency puzzle.
So a quick final recap. Litecoin, the silver to Bitcoin's goal, fork of Bitcoin, designed for speed and low cost using script. Recently added optional privacy via MWEB.
Offers those payment benefits, yes, but faces real challenges, regulations reacting to privacy, tons of competition from newer, faster coins.
The sources show a project with a rich history, clear technical design choices, and a future that's, well, still being written, but definitely active.
So, maybe the final thought to leave you with, based on everything in these sources, when you consider those trade-offs we discuss, speed versus potential security arguments, privacy features versus regulatory pushback, its established history versus nimble new competitors, how do you think Litecoin's specific mix of characteristics might actually shape its role and adoption in the future of digital money?
Something to chew on. Keep digging. Keep asking those questions. Thanks for joining us on the Quantum Chain Podcast Deep Dive.
Live in desire, no one can take your goal. I feel so free.